everyone. My name is Chris Bentley. I'm the founder and CEO of Wings for Widows, a public nonprofit located in the Twin Cities in Minnesota. 7 years ago, I realized that many newly widowed people did not have access to the financial, legal, and tax advice, and much more that they needed to make good decisions and avoid costly missteps. Wings for Widows does just that. We serve widowed men and women nationwide at no cost. Today, we're here to discuss a topic that is deeply personal and important: rebuilding your financial life after the loss of a spouse. The passing of a loved one is a profoundly challenging experience, as you know, and it can leave us feeling overwhelmed, uncertain, and unsure of where to begin. However, this moment also presents an opportunity to take control of your financial future and set yourself up for long-term stability and security. Over the next 25 minutes, we'll explore the key steps that you can take to assess your current situation, prioritize your goals, and make informed decisions that will empower you to move forward with confidence. Remember, you're not alone in this journey. By equipping yourself with the right knowledge and resources and surrounding yourself with the right people, you can navigate this transition and build a solid financial foundation that will support you and your loved ones for years to come. This is an overview of the key areas we'll be exploring to help you assess your financial situation and identify the steps needed to secure your future. Reviewing your current financial situation is a crucial first step in rebuilding your financial life after the loss of a spouse. This process involves three key components. First, organizing financial documents and accounts. Begin by gathering all your financial documents, including bank statements, investment accounts, insurance policies, and any outstanding debts or liabilities that you have. Ensure that you have a clear understanding of your assets, your income sources, and monthly expenses. This will provide you with a comprehensive overview of your current financial standing. Number two, analyze that income and those expenses. Carefully review your income, which may have changed due to the loss of your spouse's earnings or benefits. Additionally, examine your expenses, identifying areas where you can potentially reduce costs or reallocate funds. This analysis will help you develop a realistic budget and identify opportunities for savings. Number three, reviewing your and your late spouse's credit reports. This is so important to obtain and review both yours and your late spouse's credit reports. This is going to allow you to identify any joint accounts, outstanding debts, or potential identity theft issues that may require immediate attention. Addressing any discrepancies or errors of these reports can help you rebuild your credit and protect your financial future. They're free to download every year, so why not take advantage of them, right? By thoroughly assessing your current financial situation, you can gain a clear understanding of your starting point and identify the areas that require the most attention. This foundational knowledge will empower you to make informed decisions and develop a plan for rebuilding your financial life. Now, with a clear understanding of your current financial situation, the next step is to identify and prioritize your financial goals. These goals will serve as the roadmap for your rebuilding process, ensuring that you're making decisions aligned with your values and new life circumstances. Let's look at short-term goals first. Your short-term goals may include paying off any outstanding debts, such as credit card balances or personal loans, as well as building an emergency fund to cover unexpected expenses. For example, you may set a goal to pay off a high-interest credit card within the next 12 months and establish a savings account with enough funds to cover 3 to 6 months worth of living expenses. This is an emergency fund. So these immediate priorities will help provide a sense of financial stability and security. What about long-term goals? As you look towards the future, it's important to consider your long-term financial goals. This may include planning for retirement, ensuring adequate insurance coverage, or establishing a legacy for your loved ones. For instance, you can set a goal to increase your retirement savings contributions by 5% per year, or to create a trust to provide for your children's education. By addressing these long-term objectives, you can work towards a more secure and fulfilling financial future. And then it's important to align your goals with your values and your current circumstances. When setting your financial goals, it's crucial to ensure they align with your values and the changes that have occurred in your life. Perhaps you now have a greater desire to travel or to support a charitable cause that was important to your late spouse. By tailoring your goals to your evolving priorities, you can create a financial plan that truly reflects your needs and aspirations. So, by prioritizing your financial goals, you can develop a clear roadmap for rebuilding your financial life and achieving long-term stability and security. Now, while navigating the complexities of rebuilding your financial life after the loss of a spouse can feel overwhelming, seeking professional guidance can be invaluable. Financial advisors and estate planning attorneys and tax professionals, they possess the expertise and experience to help you make informed decisions and ensure your long-term security. What we found is that when you try to go it alone to save money, it ends up costing you far more. So let's look at the benefits of working with a financial advisor. A qualified financial advisor can provide a comprehensive assessment of your current financial situation and help you develop a personalized plan to achieve your short and long-term goals, the ones we just talked about. They can offer guidance on investment strategies and retirement planning, tax optimization, and risk management, all of which are crucial considerations as you rebuild your financial foundation. Additionally, in early widowhood, a financial advisor can serve as a trusted sounding board, offering emotional support and objective advice. And I can't stress the importance of estate planning assistance enough. Revisiting your estate planning documents, such as your will or a trust, your healthcare directives, and power of attorney, are a critical step in securing your financial future. An experienced estate planner attorney can help you navigate probate if it's required, and then all the legal complexities surrounding your estate. They ensure that your wishes are properly documented, and they minimize the potential for disputes or complications down the road. They can also advise you on strategies to protect your assets and provide for your loved ones, such as the creation of trusts or the designation of beneficiaries. We understand that the cost of professional services can be a concern, especially during a time of financial transition with so many unknowns. However, there are several ways to access the guidance you need without breaking the bank. Example, you can seek out pro bono or low-cost legal clinics in your community that offer estate planning services, checking with the State Bar Association where you live, or using findlaw.com. They're good starting points. You can explore online resources and tools that can help you create basic estate planning documents such as wills and powers of attorney at a fraction of the cost of hiring an attorney. Zoom Law is a popular option for this. Consider reaching out to local financial planning organizations or universities, which may offer free or discounted financial advisory services. A good idea is to contact the local chapter of the Financial Planning Association. You can Google FPA in your state to inquire about pro bono assistance. You can inquire about sliding scale fees or payment plans with financial advisors and attorneys and tax professionals in your area. Of course, there's Wings for Widows, where we match you with a financial advisor to walk alongside you wherever you are in your journey and provide personalized advice and guidance at no cost. By leveraging these more affordable options, you can still benefit from the expertise and support of professionals as you work to rebuild your financial life. For many widowed individuals, the loss of a spouse's income can be a significant challenge when it comes to managing finances. However, there are several alternative sources of income that can be tapped during this transitional period. I mentioned emergency fund before. If you have an emergency fund set aside, now may be the time to carefully draw from those savings to cover essential expenses. This can provide a crucial financial buffer as you work to rebuild your income streams, which may include returning to the workforce. Think about retirement account withdrawals. Depending on your age, you may be able to access funds from retirement accounts like Roth IRAs, traditional IRAs, or 401ks without penalty. While this should be a last resort, right? These are for your retirement. These accounts can serve as a valuable source of income during this time. What about home equity or life insurance? Exploring a home equity line of credit, known as a HELOC, or accessing the cash surrender value, known as CSV, of a whole life insurance policy can provide additional financial resources, though these options should be carefully considered. Let's not forget government and survivor benefits. Be sure to explore any government assistance programs or survivor benefits you may be eligible for, such as Social Security survivor benefits or veterans benefits. And don't forget your county that may also benefits depending on your income. So how do you manage the income that you have, especially if you have a difficult time sticking to a budget? And who doesn't, right? We're going to talk about 3 ways to spend smarter. Let's look at some budgeting strategies. How about adopting the envelope system? This is where you allocate cash for different expense categories in physical envelopes to help limit overspending. You could implement a percentage-based budgeting. This is pretty popular. Assign a percentage of your income to various expense categories, providing more flexibility than a rigid line item budget. And you can practice mindful spending. Focus on being intentional and thoughtful about your spending, being particularly careful when you spend online, rather than strictly tracking every expense. This can help curb impulse purchasing. Let's talk about cash flow tactics. You thought about synchronizing your income and bills? If you carefully align your income sources with your bill due dates, you can avoid temporary cash shortfalls. What about leveraging those emergency funds? If you have savings set aside, draw from this buffer to cover essential expenses during this transitional period. You can also explore retirement account withdrawals. Depending on your age, you may be able to access funds from retirement accounts, like we mentioned before, Roth IRAs, typical IRAs, 401ks, or other programs at work without penalty. And think about some potential cost savings. Review subscription services and memberships. Identify any recurring expenses that are no longer needed or that can be reduced. Negotiate bills and rates. Contact your service providers to see if you can lower the cost of utilities, insurance premiums, or other monthly bills. And optimize your grocery and household spending. Implement strategies like meal planning, coupon clipping, and bulk purchasing to reduce food and household items. So, by incorporating these budget strategies, these cash flow tactics, and cost-saving measures, you can take proactive steps to stabilize your financial situation and regain a sense of control during this transitional period. And as you work to rebuild your financial life after the loss of your spouse, it's crucial to ensure that your assets are properly protected. This involves 2 key components. We'll talk about a third: reviewing and updating your insurance coverage, as well as revisiting your estate planning documents. Let's start with reviewing and updating your insurance coverage. Insurance plays a vital role in safeguarding your financial well-being, and it's important to review your existing policies to ensure they adequately meet your current needs. Start by evaluating your life insurance coverage. Now, if your spouse was the primary policyholder, you may need to update the beneficiary designations or consider obtaining a new policy to provide for your family's future. Additionally, review your health insurance, homeowners or renters insurance, and auto insurance to identify any gaps or areas where you may need to increase your coverage. For example, if you've recently downsized your home or made significant changes to your lifestyle, your homeowners or renters insurance policy may need to be adjusted to reflect these updates. Similarly, if you had to take on additional debt or financial obligations, you may want to consider increasing your life insurance coverage to ensure your loved ones are protected. If you qualify, it's quite inexpensive to grab a 10 or 15-year term policy to beef up your protection. What about revisiting estate planning documents? In the wake of a spouse's passing, it's essential to review and update your estate planning documents, such as your will, your trust, if you have one, a durable power of attorney, and your healthcare directives. These legal instruments ensure that your wishes are clearly defined and that your assets are distributed according to your preferences. Start by reviewing the beneficiary designations on your retirement accounts, life insurance policies, and other financial accounts to ensure they align with your current intentions. If you had a joint will or trust with your spouse, you may need to create new documents that reflect your individual wishes. Additionally, review your power of attorney and healthcare directive designations to confirm that the individuals you have appointed are still appropriate choices to make decisions on your behalf if you become incapacitated. The third item we should consider at this point is a guardianship for your minor children. If you have minor children, it is crucial to appoint a legal guardian in your estate planning documents. This ensures your children will be cared for by someone you trust in the event of your passing. Without designating a guardian, the court will appoint one which may not align with your wishes. By proactively naming a guardian, you can provide for your children's well-being and protect their financial interests through the guardianship of their person and property. This is an essential step in safeguarding your family's future, even as you work to secure your own assets. So, by taking the time to protect your assets through comprehensive insurance coverage and updated estate planning, you can provide a sense of security and stability for yourself and your loved ones. These proactive steps will help safeguard your financial future and ensure that your wishes are honored, even in the face of unexpected challenges. As you work to rebuild your financial life, investing for the future is a crucial component of securing your long-term stability and independence. However, the investment landscape, it can be complex. It's not for the faint of heart, especially during times of transition. When considering your investment strategy, there are several key factors to keep in mind. First is risk tolerance. Assess your comfort level with market fluctuations and your ability to withstand potential losses. Nobody likes to lose money in the market. This will help determine the appropriate balance between conservative and growth-oriented investments. Look at the time horizon. Basically, how old are you, right? How much time do you have to invest? So consider your short-term needs, those goals we talked about, as well as your long-term goals, such as retirement or legacy planning. This will inform the appropriate investment timeframe and asset allocation to optimize your outcome. Third, diversification. Spreading your investments across different asset classes, such as stocks, bonds, and cash equivalents, can help mitigate risk and provide more stability during rough economic times. Again, given the complexity of investment planning, seeking the advice of a qualified financial advisor can be invaluable. They can help you navigate the options and develop a personalized investment strategy tailored to your unique circumstances and goals. Whether you choose to invest in conservative options like bank CDs or a more diversified portfolio of stocks and bonds, the key is to approach investing with a clear understanding of your financial needs and risk tolerance. By taking a thoughtful and strategic approach, you can build a solid foundation for your financial future. The loss of a spouse can have significant tax implications that require careful consideration. As you work to rebuild your financial life, understanding these tax-related factors and seeking professional guidance can help ensure you maximize your available deductions and credits. One of the most immediate tax-related changes you may experience is the shift in your tax filing status. Transitioning from a married filing jointly status to a single or head of household status can impact your tax bracket, standard deduction, and eligibility for certain credits and deductions. The loss of your spouse's income may result in changes to your overall taxable income. This could affect the taxes you owe or the potential for tax refunds. Additionally, any income you receive from sources like retirement accounts, annuities, survivor benefits, or life insurance payouts may also have tax implications that require careful consideration. As you navigate your new tax situation, it's also important to explore all available deductions and credits that can help offset that tax burden. This may include deductions for medical expenses, charitable contributions, or mortgage interest, as well as credits for dependent children or caregiving expenses. Again, it's so important that you seek professional tax guidance. Given the complexities involved, working with a qualified professional, such as a certified public accountant, CPA, or an enrolled agent, can be invaluable. It can help you understand the tax implications of your specific circumstances and ensure you are taking advantage of all eligible deductions and credits, ultimately minimizing your tax liability. By proactively addressing the tax-related aspects of your financial life, you can take an important step towards securing your long-term financial stability. As you navigate the process of rebuilding your financial life, it's crucial to surround yourself with a network of trusted advisors and a supportive community. This journey was not meant to be traveled alone. This multifaceted approach can provide the guidance, resources, and the emotional support you need during early widowhood and well beyond. Assemble a team of professionals. I think that's been pretty clear through this presentation. In addition to the financial advisor and estate planning attorney you've already engaged, consider expanding your team to include other specialists, such as the tax professional or a counselor who specializes in debt management. These individuals can offer expertise, objective advice, and a holistic perspective as you make important decisions. Engage with a supportive community. Connecting with other widowed individuals can be immensely valuable as they can share their own experiences and insights. Organizations like Wings for Widows offer private online communities, such as a private Facebook group where you can pose financial questions and receive answers from knowledgeable professionals. Participating in these forums can help you feel less alone and provide access to a wealth of practical advice. And lean on loved ones. You can't hesitate to reach out to close friends, family members, and even trusted colleagues at work who can offer emotional support and in some cases, even practical assistance as you navigate this journey. Their empathy and willingness to listen can be a source of comfort and strength. We do caution you from soliciting and accepting professional advice from well-intended non-professionals or other widowed people. Rather, seek professional advice from professionals because experience does matter. By building a comprehensive support network, you can ensure that you have the guidance, resources, and emotional backing you need to make informed decisions and move forward with confidence. As you embark on this journey of rebuilding your financial life, remember that you are not alone. The steps we've discussed today are designed to empower you with the knowledge and the tools necessary to create a secure and fulfilling financial future. I sincerely hope that the insights and strategies that I've shared in this presentation have provided you with a roadmap, at least a starting point, to navigate this financial transition with confidence. By taking the first step towards assessing your current situation, prioritizing your goals, and seeking the guidance of trusted professionals, you are well on your way to regaining clarity, control, and stability in your financial life. If you have any further questions or would like additional support, please don't hesitate to reach out. Wings for Widows is here to assist you in any way that we can as you work towards a brighter, more financially secure tomorrow. Thank you, and I wish each and every one of you best wishes in your journey.